All right, welcome to this call. The other sorry about the network. We couldn't find that. I think it's the Zoom network. So I was teaching on mitigation candle, and I said it's a smart money play. Why did I call it a smart money play? It is smart money that is just doing their thing. So you will not want to get hooked up within the liquidity. So what are you going to do? You have to wait for it to play. Yes, you have to wait for it to play. Okay, I think I'm done. So, all right. So for mitigation candle, as I define here, is the candle that captures liquidity and then leads to an explosive move. I don't want to say is the candle that leads to a break of structure because sometimes it might break structure to the opposite direction, which some of us don't know. You just feel that a break of structure is when structure breaks down. No. So mitigation candle is this candle. So you have a bearish candle within this place. The candle comes, you see that capture, that sell candle where the volume is placed, just come and then gives you the move to the opposite direction. Yeah, yeah, maybe something like this. Or sometimes this one is not here at all. And then you see the next move, you see buy candles up at the same time in a very speedy move, explosive move. So this is liquidity building up here. Like I said, price moves from one liquidity to another liquidity. It's looking for what to take in the market. So price moves from this junction to the other junction. Once price has captured the liquidity below, the next liquidity to capture is the liquidity above. Now the question is, how do you trade this order block or mitigation candle? We call it mitigation candle because there are orders here that were put in this candle to push price down, clear all these sell side liquidity or double tops, double bottoms rather, and the price rallied away in an explosive move. Now, how do you trade it? You want to wait for price to come to the 50% of this candle because this is actually a sell to buy candle. This is a sell to buy candle. Their intention was to buy. If smart money wants to buy, they will first of all have to sell to buy. If smart money wants to sell, they will buy first and sell. So in this case, they sold heavily so that they will buy. What it then means is that there are orders here that are in drawdown. There are orders here. So we know that smart money is still going to come back to this candle, to this trade that is here. Smart money will definitely come to this point sooner or later. So you just want to wait for price at the 50% of that candle or at the open of the candle. This is how it should look. So you want to mark out that sell candle, not this buy candle, this sell candle that captures liquidity. Just mark it out and wait for price at the open or the 50% of it. That's what price will do. Price will now come to the 50% of this mitigation candle because they have their orders resting here. Unmitigated orders are still here. So we expect that price will come to either 50%, tap it, and then price will rally away. This is the concept of mitigation candle. Most of the times, it will lead to a break in market structure. Now, let me push this up. I was talking about VIX 25, and I said from this zone, this was a retracement leg. of this 25. This is a retracement leg of this 25. Now let's see, let's plot out the mitigation candle here. Price started moving. Just follow me. Price gave this low. Price gave this high. Price gave this low. Price gave this high. Price gave this low and rallied away. So let me zoom this out because this is a mitigation candle here. If you watch, look at this sell candle, and after this sell candle, there was what? A bullish engulfing. You can see that there's a bullish engulfing and this explosive move to the upside. So this is a mitigation candle. Now, what are the characteristics? Watch. It captured all of these liquidities that were resting here. So when price was coming, first touch, second touch, third touch, came back again. We in the smart money, we know that this is liquidity that market is trying to build. Smart money wants to build liquidity around this zone to be captured. This is liquidity to be captured. So this was the candle that came. This sell candle came, captured this liquidity, and then price rallied in an explosive move to the upside, breaking this high. But this was a low, this was a high that formed this low. So this was a high that gave us this low. After this low came this high, came this low. So this was liquidity here also, that after smart money has captured the liquidity below, where are you expecting them to go to? Liquidity above. They have to go to liquidity above. So now you know this candle is in drawdown because there are volume of orders here. So that's the candle we call mitigation candle. Others call it order block, but it is called the mitigation candle by smart money. It's not an order block. It's called mitigation candle. So you just put out this candle and just zoom it out, mark it out, and then you want to wait for price to come to either the open or the 50%. Now look at what price did when price, before price rallied, the way price first of all came to the open. So those that trade order block, they'll tell you once price come, touch the open after this bullish engulfing, they came back to the open, mitigated out of the open and rallied away. But we know that price will not come to the open of the 50% after price has moved away, after the explosive move. Price came back to the 50%. So from here, you now want to get in on your trade to capture this high. This becomes the high you are going to be looking to capture because this was the last high. This was the last high when price gave this low. This was the last low. So you are looking to capture this. So you get in on this trade from here. If I was playing, this is the daily position. The other things the other components we add in the Smart Traders Network, lower time frame entries, spot of imbalance and other things, and then you want to take price from here. Just I've given you a 1 to 4.5 on the daily. On the daily. Now, this mitigation candle, remember I said sometimes it will, because it's leading to an explosive move, 80 to 90% of the time, there will be an imbalance. So if I go to a lower time frame, now you're going to find that imbalance. So let's see if we find the imbalance on H4. Yeah, we are teaching. So let's see, let's take the pain to go through everything if we find the imbalance on the 4 hours. Let's see. Okay. To find the imbalance on the 4 hours, fine. That's the candle. This is the whole move, the whole candle. One candle on the daily is several candles on what's it called? On 4 hours or 2 hours or 1 hour, depending on the time frame. But I'm using the daily time frame because that's what we use for our structure. So now I can't really spot any imbalance here. I can't. Yeah, okay, there's a tiny imbalance here. You can see there's an imbalance here this week and this week. But let me see 2 hours or the 1 hour. Let's see if we'll find that imbalance. Yes, we'll find it. I'm sure of that. Let's see if we can fetch that information. Okay, good and fine. Let's go. Let's go. Let's zoom out. This is the candle. This is 2 hours. Okay, this is 1 hour. On 1 hour, I cannot really find that imbalance. If you continue to go, you find it. The imbalance will be somewhere. Will be somewhere. So you see the explosive move. But on 1 hour, it was just a chubby move. You can see this chubbiness on 1 hour. That's why you need to look at your structure from the higher time frame. Why the daily tells us clearly that it's an explosive move, a bearish engulfing, and sorry, a bullish engulfing and a bullish move to the upside after liquidity has been cleared by this move down. You see how price rallied away. Let me go back to 4 hours. The other components we have, we'll now want to get entry and then reduce our stop loss and all of that. That is what we teach all of that at different times. But today I'm just talking about the mitigation candle, and I'm trying to explain to you how it plays. So this is it. Price came back to the 50%, and from the 50%, price distributed perfectly. You can see that distribution, sorry, that accumulation, price accumulated perfectly and came back, and then up we went. Price left, shifted out of that place. So you want to play the mitigation candle, just wait at the open or the 50%. This happened on all time frames, so it doesn't really necessarily mean maybe it must be on the daily or 4 hours. It happens on all time frames. You know, the market is fractal, so it happens on all time frame, like all time frames. So that is mitigation candle. Let's look for another example, still on VIX 25. I'm trying to speak this loud because my headphone just got spoiled today. I traveled, came back, and I met that it's not working. So I'm using my system volume, my system speaker rather. So that's why the volume is somehow, like that. Price came here. This was external liquidity or the buy side liquidity. And this is liquidity for target or liquidity to be captured as target. Immediately, this was captured, printed the mitigation candle. We are waiting for price here, and price came in beautifully, gave us the accumulation to capture this. After price captured this, what did price do? Price came back, retested, and moved away. Retested and moved away. We're going to talk about this when we're talking about institutional candle or the smart money cube. We're going to talk about this. But let's go ahead. Let's see if we find another mitigation candle. Yeah, this is also a mitigation candle. Price came, cleared. Look at how this candle cleared all of this liquidity here. All of this liquidity was cleared by this push down. This was the candle that pushed down and cleared this liquidity. So that candle is supposed to, that candle is a mitigation candle. You can see when price returned, price came straight to the 50%. This was the candle that rallied down, cleared this, and resulted to this move. Price just tested it. But I'm going to categorize this on smart money cube, that's institutional candle, when we teach that in the next class. That's the next thing I'm going to teach. Then price kept rallying up, rallying down. Look at this explosive move. You can see this explosive move. What can you find? There was order, heavy order placed in this candle to capture all of this liquidity. Heavy order was placed in this bearish candle. After that bearish candle, what do you see? Though not a bullish engulfing, but you see this explosive move to the upside, these successive buy candles or bullish candles. So it tells you that this candle is an order block. It's a mitigation candle. So it is this candle, this bearish candle, you have to mark. If you watch, I mark only the body. I'm not marking the wick. If you are marking week to week, but I mark body because the body tells us the more of the volume that was put in, the sustained volume in that candle. So what are we expecting? We're expecting that price is going to find its way somehow. So either the 50% and we go, the open and we go up, or price we find its way to the 50%, and then we can from here go higher. That's what we are expecting. So you see, when we drop trade ideas in the group, this is what informed the trade ideas we drop. We are expecting price to come into that mitigation candle, close their sell positions because they were selling in this candle to take everybody out. And they bought in this candle. So this sell position, this candle has some sell orders that are in negative of form, that are in drawdown. So they come to mitigate out of it 50% or the open of the candle, and then the rally away, just like what you saw played out beautifully here. They came to the 50% and then they rallied away. So what are you doing? You are going to be waiting for that 50%. And if you look carefully, you are going to find out that there is an imbalance here. What it means is that there was a lot of volume in this order that resulted to this massive and explosive push to the upside that caused this imbalance. So I'm not going to be waiting at the imbalance. I'm very sure they will close the imbalance. Is the mitigation candle I'm looking at. They are going to close the imbalance, I'm sure of that. But this mitigation candle is where I'm looking at. Okay, if price come here, then I want to wait for my other entry techniques. Then we can now get in. I'm not looking at this candle. Let me remove this first. I'm not looking at this bullish candle. That's not what I'm looking at. I'm looking at this sell candle, not the bullish candle, because they sold to buy. So this is a sell to buy candle. Yes, they sold to buy. All right, I think that is another example. It's the same thing. I've been talking about bullish mitigation candle for a buy. Now let's talk about mitigation candle for a sell, because whatever you have on the buy side is what you have also on the sell side. If it's like this, then we come back, mitigate out of this position, and then we come like this. You see how this candle pushed out, this buy candle pushed out everybody here and then sold massively, taking out these lows. So they need to come back here and then mitigate out of their position. So let me show you an example for a sell candle. Then we go back to what I was drawing. All right, price has been bearish from here. Price was bearish, came, give us this low, give us this low. Now the question is, you will take this as a mitigation candle. This, you take this. Why? You say, okay, price give us yeah, price came and cleared all of this week. Yeah, we all wanted to play this, but did it work out? I'll tell you why it didn't work out. Did it work out? The answer is no, because this was not the mitigation candle. Let me show you. This was the mitigation candle. You see this, where this buy candle started from, after this small cube, this sell candle, there was this push buy candle, took out all of these other persons that were here, came into this IPA, and after this push of this was a rally down. So this was actually the mitigation candle, these two candles here. That's the mitigation candle in this trade. So price came into this place and rallied down. Now we expect that price someday, somehow, this is the daily, it took weeks. Someday, somehow, price will come to this point and then we can sell down. And that's exactly what played out. Let me zoom it together. All right, you see, that was what played out. Price just came, tapped the open of the candle, and we are selling. So now, would you have been able to get a play? Let's go to the 1 hour. Let's see what happened here. You will see the play was very clear. But just because we are not focusing on one asset, we always want to trade so many assets. We miss this. VIX 25 is one of my best assets, traded it for a long time, but I missed this sell that is running currently simply because I didn't pay attention to it. Price came here and gave us this break of structure. after coming to the mitigation candle, what you are now going to be waiting for is your entry techniques. Price gave you this break in market structure. And you can see how price rallied up with these candles, sweeping this high here. So that was the liquidity sweep. Price swept all of this, gave us a break of structure. Now, where is the candle within this region? This was the last candle. This was the last bullish candle. All of this push up. So this is the candle you are now supposed to mark out after price give you a break of structure for your entry. This has been the candle. So you are waiting for price to come to either open of it or 50% of it. Open or the 50% of this candle. That's what you are looking for. Open or 50% of this candle. Now we are already in the weekly mitigation candle. You saw how price cleared this liquidity with a move and came down, broke structure. Now you are waiting for that last candle, that same buy to sell candle. You see how this candle bought and sold down. It bought, cleared some of these weeks and sold down. So this was the candle. 50% of it would have just given you the entry. Price came, if you were focusing on this asset, 50% of it, stop loss are the highs. And then first, you want to take profit from these liquidities below. See these liquidities below? That's the first place you want to take your first TP. First TP would have been here at these lows. So that would have been your first TP, and that would have given you a 1, 2, that's a 1 to 6. Price came to the weekly mitigation candle, and price gave you your model. This is the model you are looking for. Price came, broke structure, came back here. You can see that same break of structure, and price wicked out. This was the week. Price just came weak out everybody because it needed to come to 50% of the candle. So if you had even played the open, it would have still been free. That would have been fair. This is about 6 pips stop loss. And price started selling from that point. Let me go back to the daily. Okay, 4 hours first. Let's see. Price started selling from that point. First TP, 1 to 6, achieved. When that was achieved, price came back. Now to this same last candle, this buy candle that resulted to the sell. Price came back to the open of the candle. Look at the candle. This was the candle. Let me remove this now. You've seen that this was the candle. This was the buy candle to this sell. So that's the candle you want to pay attention to now. This is the candle. 50% of that gives you the other entry. 50% of that gives you the entry. Let me try to zoom it out. You can see that buy candle. It was that buy candle that pushed up and cleared everybody here. That was the candle. Yeah, that was the candle that pushed up. The buy started from here, uninterrupted, bought up, cleared everybody, rallied down, and broke all of this down. So that was the candle that was in drawdown. Second entry, 50% of the candle just play, and then your stop loss at the highs. Then your first target is this last low. So this becomes your next take profit. This becomes your next target for take profit. Do the last low. So let's see, what did this one give us? Price give us a 1 to 4 at this range. You took your 1 to 4 and quietly left. Price is just around that zone for a very long time. We have taken 1 to 4. If you had held this trade to where we are currently, I think this is a 1 to 7. Yeah, you can see that. That's a 1 to 7. After getting a 1 to 6 point something, you get another 1 to 7. By just playing mitigation candle, you want to wait for that candle to play out. Please, if you are getting value from what I'm teaching, or you even understand what I'm saying, can you just drop a 111 in the chat for me, or just say I'm getting you, I'm following? Just let me know, please. I think I need, because since I muted everybody, I need to know if we are following. All right, thank you, Mr. Bolu. Thank you, Abraham. Thank you, everyone. Please let me know if you have your question. You can drop it in the comment section of this Zoom call. You can drop it in the comment section. So we have looked at the mitigation candle for both buy and for sell, and that's just how it plays. That's just how it plays. So we are hoping that price will come down to this other mitigation candle. Some persons call it order block. You are right, but smart money calls it mitigation candle. What it means is that they are coming to close some of their positions that are in drawdown. That's why it's called mitigation candle. They are coming to close their positions that are in drawdown. So if you call it order block, the name is not the problem, but understand how to trade it. I've told you how to trade it, wait for 50% of it or the open to get in. Then when you get there, of course, you know your model, you want to wait for break of structure to the opposite side, and then you want to take your trade. Take your trade with. When people come to my DM and say, oh, how come you use this kind of lot size? How come you have this kind of confidence? It's simple. The market just moves in the same direction. So if price comes here, I'm going to wait for price to come to either the 50% or the open, and then I'll wait for that, my formation, and then I want to target the highs, the highs. If price breaks this level, I'm going to call that my break of structure. If price breaks here downward, let's say price comes and break it, that's a break of structure. Then I'll have to be waiting for this candle. I'll have to wait for this sell candle, this buy candle up before this explosive sell I'm seeing. I'll wait for all of this candle now, all of this. That's where I'm going to be waiting for. Because I know that someday, somehow, price will come back here and then we can sell. So that is that. Maybe I should go to another asset and see if we can get maybe another example from another asset. Let me send this to the group. Yeah, I'm sending this to my resources group so that you can take advantage of it. Let me send this now. Just 1 minute. Let me send this to the group. So if you have your question where you don't understand, you want me to throw light, please drop it for me, and then I can look into it. I can look into it. So let's see if we can find another example. Would I want to remove this? Okay, let's see. Is this 25? Let's see this as 25 so that it can remain there. All right, let me load. All right, let's say boom 1,000. Any asset. Let's just check. Please drop your questions. Let me attend to them before we say good night to the call. All right. This is boom 1,000 mitigation candle. So any direction, that candle that captures liquidity and lead to an explosive move. So this is 4 hours. Let me go to daily first. Let me check the daily first. I think I prefer using the daily. Okay. So what have we been seeing? You see price was, kind of bullish in this environment. But, this was the move. This was the last candle that came. They didn't break the structure. Price has come and swept this now. I'm moving all of this. Price has come. You can see this move. This move is the mitigation candle. This move up. So I'm waiting for price to return back to this move. Yeah. I'm waiting for price to come back here. You can see how price cleared all of these. And then, so price can decide to come back. You can see that imbalance in that zone. Price is there, and there is some form of double top here to tell me that we are going to sell. Yes, I'm expecting a sell. Price has given us all of this break. So price can come back here and we go down in the long run. But following the 4-hour structure, you can see this high, this low, this high, this low, this high, this low. So I want price to either go down from here, clear this before we can have a break to go up, mitigate here, and then we come back down. All right, that's what I'm looking at for this. That was why I sent that markup. Let's just go back. Let's see whether I'll find a mitigation candle for a sell from bone 1000. Mitigation candle. I want the one that is very clear and perfect. Okay, let me use this. This is clear. This is very clear. We know we are bearish. We're bearish. So look at what price did here. Price rallied down, created all of this liquidity, pushed up. You can see all of this pushed up. Look at this candle. This was the buy candle that sold and we broke this low. So it resulted to a break of structure to the downside. So this candle was in drawdown. This buy candle to sell. So we want to wait for price. Someday, somehow, price should return back to this candle. This candle, just make sure you, I use the body. Smart money will use the body. So price should return back to this candle. Oh, Jesus, wait, I know. Yeah, price should return to that candle. The volume was pumped in this buy candle to sell down. This buy candle to sell down. So this was the candle, the mitigation candle for a sell. You can see how beautifully price came in. So you were to sell this asset, and you have the entry at the 50% since it's the daily, stop loss at the week, and then we can go down. Then you are not going to do this on the daily. So what do you need to do? You now go to a lower time frame and wait for your model formation. Wait for the model formation. So let me go to let's say 1 hour. Yeah, 1 hour should be close. If you can get anything from this zone, it's a long history. Let's see if we can find anything from there. Okay. Is that okay? I think this is it. Seriously, no, that's not it. It's behind. Stay with me, stay with me, stay with me. Let's see if we can find it. Oh, geez. Not that we can't get it. It's far behind. Let's use 4 hours. It's far behind. We can get that details. You can get it. Can we get it on the 4 hours? Maybe, maybe not. Okay, on the 4 hours. But you still know we don't trade 4 hours, but you can still see it on the 4 hours. You will see it. Yeah, I'm sure. All right. Price came to the 50%. What can you find? Price rallied up and did what? And broke. Price gave you that formation, that model. And then where is that last buy candle before the sell that broke? This was the candle. That's the candle you now want to wait for price to return back to. You want to wait for price to come back to that candle. So I can remove this now. So if you have played 50% of this candle, stop loss here, you'd have been on this trade. You'd have gotten an entry from here. Okay, let's assume we waited for 1 hour break of structure when price came in here. You can still see that break of structure. The price came, cleared all of this liquidity to the upside. When price came into this whole zone, and price, this was the candle that cleared the liquidity. These two buy candles. This is the last candle. And then price broke below, closed below this. So you just get 50% of this candle. If I measure this candle now, 50% of it is what would have been the entry. So this would have been your entry, 50% of this candle. Then stop loss at the highs. That's 51 pips. It's still too big for us in the smart money. Then where would be your target? First target, this low, because this is now liquidity to be taken as target. So first target, that was a 1 to 6. Price came, gave you all of this, and price rallied back. When price came, you can see this beautiful sweep of all those chubbiness that was there. So this became another candle to look out for. Price may come there now. Price may decide not to come there. Did price come there? I don't think so. Price never came back to it. Price didn't come back to it, and price rallied away. Oh, geez. Price came. See? Price came. I didn't know price came back. You see that? 50%. I'm sure price came back to the 50%. But that was the candle. Looking to the right, I wasn't seeing the right, but I know that is the normal place. So price came back to it after, this is 4 hours. This should be many, many days, but this was the last. You can see that mitigation candle there, swept liquidity and broke these lows, resulted to this whole impulse move. Are you getting it now? If you check, you might find imbalance within and all of that, but price came here and gave you this beautiful move. First, take profit. It's now going to be here. This is now your take profit. These liquidities that are here, equal lows. All these ones are now your first target. The price get there, look at it. Price came there and gave you a 1 to 10. And put it on the daily now so that you see. Price came there and gave you a 1 to 10, like Jesus. A 1 to 10, beautiful 1 to 10. Beautiful 1 to 10. And price kept rallying down. This one will now be your next target. Let's say you took partials from here. Price kept just pushing down. Price never came back again. Price kept pushing down. So this is how you would have got all this massive move. Now, price didn't give us any other good entry again. There's an entry that's already here. You can see how that price took out this low and took out this. Price cleared this liquidity now and has broken this structure. So there's only one thing I'm expecting. Price should come back to 50% of this candle that cleared liquidity, and then we go down. But on the short run, 4 hours, price might decide to go down from here. I've showed you that move on the 4 hours, how it should play out on the 4 hours. Okay, brilliant. Wow, thank you, sir. So let's go to the 4 hours. You will see how this is playing out. We're just playing structure, but we're looking for mitigation candle. That last buy candle that resulted to the explosive sell move in a bearish market, or the last sell candle that resulted to the bullish explosive move in a bearish market. Whichever way, you know what I'm saying. So you can see this high, low, and high. So I'm expecting price may go down from here because we have double bottom, liquidity below. Price may go down from here. That's what I'm expecting, and then we go down. You get it now? So if we clear this low, then we can look to buy. Once we clear this low, I see a break of structure below these lows. I'm going to buy to go up. But price has weak out this already, but I still think price should have break here or come down below, take this liquidity, then we can go up. And if we go up, this is the kind of place I like using 10 lot size, because you are sure the market is going to go your way. You are sure the market is going to do the same thing. It's not going to just violate the structure because you are using 10 lot size. No. It's not going to violate the structure because you are using 5 lot size. No. Smart money is just playing their team. They don't even know whether you are there. They don't know. They are not concerned. How many lots are you using? They are not concerned about that. So price might just come here. Go. If price does not go down from here to capture this low, as I'm anticipating, maybe price capture this low, then we get this formation here. Then I'll be looking to buy to this 50%. To buy to this 50%, I'll be looking for this formation so that we can sell down. Thank you so much. I think the call will come to an end now. You can reach me in the Telegram so that we can discuss any other challenge. Thank you so much for hopping on the call.